What's up? This is Ryan with Planet Cheapskate. In this video, we're going to be talking all about my most valuable investing trading strategy. Surprisingly, this also happens to be the easiest as well. In fact, the hardest part about this strategy is to not get too fancy with it and keep it simple. I can tell you that I've made more money in the stock market with this strategy than any other hint, tip, or trick that I know. Also, be sure to stick around for the most crucial tip regarding this strategy, which is the incredible exit timing strategy for options. And it can actually also be used for any stocks that you may hold that you may want to exit out of. I'm going to tell you exactly what you need to do at the end of this video that will help you get out of your trade without any unnecessary losses. I'd say this tactic works for me about 90% of the time whenever I'm looking to exit. Now, to be clear, I want to say that I'm not offering professional advice on investing. I'm not an expert and cannot guarantee you will have the same results as I have had. This video is only for educational and entertainment purposes only. So first, I'd just like to take a very brief moment to personally invite you to subscribe and join our community. I do a home loan rate update every Friday going into the weekend, along with a new video every Thursday, helping you manage through the world of credit, investing, real estate, and home loans. Also, when you do subscribe, be sure to hit that little bell and it will alert you whenever I release fresh content. Now, with all that out of the way, let's dive right in. So we all know a ton of money can be made or lost in the stock market. In this video, I'm going to share with you my most successful trading strategy. I was taught this strategy from a mentor of mine while I was in college. So when it comes to investing, many people don't know this, but investing is actually long-term and very, very boring in my opinion. So I actually hire a financial planner who manages all of my long-term investing. I do have some tips regarding investing that I can share with you, but I just wanted to get that out of the way because most of the bulk of my knowledge, expertise, and experience involves not investing, but trading. Trading is shorter term, almost like betting or gambling on a stock. You're making an educated guess on it based on research that you do. I trade by way of stock derivatives called stock options. Stock options allow you to bet on a stock to go up or down without actually owning the stock itself. So if the stock does what you think it's going to do within a certain time frame, then you will win a determined amount of money. My strategy involves only, when the timing is right, buying what are called call options, which is what we call the options that allow you to bet the stock is going to go up. Now let me lay down the basics of this strategy. First off, you need to have at least $500 in a trading account. I prefer Robinhood, even though it's gotten negative press lately, and I have included a link below that if you sign up and fund the account, then you and I will actually both get a free share of a random stock. Feel free to use that link to sign up as a way of saying thank you for the tip if you haven't signed up with Robinhood already. So the first thing you need to do is have $500 and fund the account. The next thing, you need to be comfortable keeping the $500 in the account potentially for weeks or even months without touching it. This strategy isn't used every day, but will have you look for a very specific event to happen before you move on a stock option. If you like to trade every day, this won't be the strategy you will use every day, but a little sweet strategy that you can pull out of your pocket when the timing is just right. You also are going to be buying calls that have a no shorter expiration period than 90 days. The further the expiration out, the better. So what are we looking for? We are looking for companies that are in the S&P 500 or Dow Jones Industrial Index that are successful companies, large companies. Now later, whenever you get more savvy, you can do your own research and possibly go away from the S&P or the Dow. But for now, just keep it simple. So we are looking for companies in these indexes that have received bad press, media, or negative events. These companies are large enough to survive this negative information, but their stock price will take a hit whenever the information comes out. So when this negative event or info happens, you are going to wait about 2 or 3 days for the news to bake into the market, so to speak. The only exception to this would be if the event or news happened on a Friday. In that case, you would want to look at buying the call on the following Monday after the weekend. You're going to wait until the stock price takes the hit, and regardless of how far it falls, you are going to find a call that has a strike price closest to what the stock price was before the event or news rounded down. So for example, if the stock price was 153 before the event, you will buy a strike at 150, with an expiration no shorter than 3 months out. The longer the period before the expiration, the better. Typically, within 60 to 90 days after the negative news, if it's a S&P or Dow company, the stock will rebound back to the pre-event price. Your option will then be more than likely at the money or in the money, which either way means you should have made a profit. So how do you know when to get out and collect your profits? I use a simple strategy that involves tracking the open interest of my option, which is a common statistic that is tracked every day at the end of day on options. This is the strategy I was speaking about at the beginning of this video. This is a huge trading hack that can even be used for regular stock trading. If you're using this for exit out of a stock, just track the open interest on the option that is closest to at the money on the stock price on the Monday the market opens in the week you're looking to get out. If you're using this on option, just go ahead and use it on your option position to track. The rules are very easy here, and here they are. Whatever the stock is doing, it will continue doing as long as the open interest remains the same or is increasing. So if the stock is going up and the open interest is increasing or the same, then you will continue to see the stock go up. If it's going down and the open interest is increasing or the same, then it will continue to go down. Once the open interest goes down, the stock will be changing within the next few days. So if you're writing your call and all of a sudden you notice the open interest went down that day, you need to set your exit position for the next day. This tactic works for me about 90% of the time for a decent exit. It may not give me a perfect exit, it may not give me an exit at the top of the position, but it will protect against huge losses. So there you have it. My simplest, most successful trading investing tip that I have used to secure huge profits. I've used this strategy in the past for companies like Delta, Axion, Taser, Biogen, Wells Fargo, and I've even used it on the SPY ETF during the COVID pandemic. I've also revealed for you a tried and true exit strategy for getting out of your option or stock at the ideal time to prevent giving back huge gains. Please leave a comment below if I missed anything or you have a question. I'd love to hear from you. And if you gained value or knowledge from this video, do me a huge favor and smash that like button so more people just like you can see this info. And if you like this video, I'd like to invite you to watch one of my other videos. Over here, I walk you through the complete home buying process step by step. And over here, YouTube has determined that you may enjoy this video. Thank you for tuning in. Until next time, best of luck.